Hi, I'm Dan Scanlon. I'm the head of portfolio and asset management at Invitation Homes. I've been there for the last 13 years, since the early days that we formed Invitation Homes. Well, overseeing now 110,000 homes under management and owned on our balance sheet of 85,000 in total. I oversee all of our asset management activities and have most recently been working on developing our community operating model as we continue to expand our investments into the build-to-rent space. So it's interesting, being in the SFR space for now the last 13 years, this is the first time we've seen a little bit of slowing in the rent growth into some declines on our rental rates, largely driven by a lot of new supply coming into the market on the backside of a lot of build-to-rent developments and other movements that we've had, conversion into rentals through existing people not wanting to sell their home and basically lock in their low interest rates. So that's created some downward pressure on rental rates. I think we're past what I would call peak deliveries of build to rent. We're seeing data that shows that those will decline over the next 12 months. So if you want to call a little bit of a bottoming out effect, where we'll get back to more normalization of our supply and demand. I think that speaks well to the SFR industry. It's very resilient because we haven't really seen massive degradation in rates, but just some. Largely through more choice to the consumer, and that's probably a good thing. Balance is what we like. I don't necessarily want to have too much supply or too much demand. I think that creates some imbalance, and I like to see a nice, healthy real estate market, and we're monitoring that closely as we move forward into 2026. So we saw a lot of institutional capital come into the market. I would call it the second wave of institutional capital. We were part of the early days in 2012, 2013, where a lot of institutional capital came in, cleaning up the distressed inventory to build the scattered site portfolios. 2019 into 2020 in the low interest rate environment, I saw another wave of capital coming into the space. They probably didn't realize what it takes to build a true operating platform. We had the advantage of building it over many, many years. So we started having conversation with different institutional players saying, can you manage our homes on our behalf? Real institutional level management. So that was really the opportunity that we saw. We have a few joint ventures as well as third-party management agreements with what I would call traditional institutional capital. We wanted just the rigor of more of what multifamily might have provided, and we saw that as a good opportunity to continue to grow our portfolio in an asset-light environment to provide property management services to other institutional investors. I always love to come to the IMN, traditionally go to the property management and SFR one, so probably 3 to 4 times a year I'm at IMNs. Always take on a little bit of a different theme. More recently, Invitation Homes has gone into the build-to-rent lending space where we're actually offering debt to developers. It's an interesting diversification of our business model. So I'm spending more time today listening to some panels around build-to-rent lending, which as somebody who's in asset management is dealing with the hard assets, even though I know traditionally a lot about the debt financing side of real estate, haven't spent that much time in the last dozen years there. So I'm anxiously looking at it as a nice opportunity for growth and learning what other competitors are doing in the space. Well, I love that it's in Dallas. Being based out of Dallas, it's nice not to have to travel for a conference finally. Well attended, nice location, really good panels that I'm seeing today. Really good conversations with the panelists, a lot of good ideas. We're all approaching, the evolution of the build-to-rent structure in a similar place. I think everyone comes from a different view, different experience. If you're a builder, looking at how you operate these. If you're, multifamily, looking at the community operating model. If you're single-family scattered, looking at the community operating model. All coming from a different area, but probably arriving at a similar conclusion. And that's what I find very interesting is that even though we're all in a different avenue to get here, we're all realizing, okay, we're operating these in a similar fashion. We're seeing the same behaviors. We're seeing the same resident demands, and it just gives conviction to kind of what we are doing and how we're going to continue to improve in the industry and keep moving forward.